Elizabeth Warren is one of the most financially illiterate birthing persons in American politics, but I wanted to take a quick second to break down this video of her talking on The Readout, the most factual and truthful show on TV. In the clip, she discusses the, quote, false narratives about the economy and blames the increase in gas prices on, you guessed it, price gouging from oil companies. Two real winners right here.
We know exactly who the oil companies, what the oil companies pay attention to, what is their number one priority: profits.
First of all, the priority, or at the very least, one of the top priorities of any business that exists, is to generate profit and create value for its shareholders. That is the reason that businesses exist in the first place. Without a core focus on this very important and fundamental aspect of running and operating a successful business, the business would not exist, no value would be created for the shareholders, the investment and the cash would be squandered, and the output and production and benefit to society would be non-existent. Let it be known, businesses that exist, and ultimately businesses that flourish and thrive, are for the betterment of society. They create output, they create jobs, they create income for shareholders, and they create more economic activity. The positive aspect of a business creates the result of a higher quality of life and a higher standard of living for all peoples of the earth, especially in the case of something as crucial as energy. The vast majority of businesses create a net positive on humanity and improve the quality of life for many of the people in the world. It's when the dirty, filthy, stinking bureaucracy gets its dirty little paws involved in it that it creates one-sided operations. Without their involvement, the free market would dictate which businesses win and which businesses fail, purely and simply. That's how a free market capitalist economy works. But back to the video.
And so think about it this way. If this were just ordinary inflation, we might see prices go up. But prices at the pump have gone up. Why? Well, let me give you a hint. Chevron, Exxon have doubled their profits. This isn't about inflation. This is about price gouging for these guys.
Okay.
So I get it. When we see prices go up, we're all concerned, and the Republicans want to come in and just try to hammer on one theme about this economy. But we got to pay attention to the fact that folks like the oil companies say, I think it's just another opportunity to make profits, and we need to call them out on that.
Okay, lots to unpack here. First, let me preface this by saying that this term price gouging is something that you're going to hear a whole lot more in the coming years as this money printing, which ultimately causes all of this inflation, starts to get more and more out of control. And this is not a right-left issue. Donnie printed a ton of money too. Just think about the facts of what's going on right now. They are printing an absurd quantity of cash and injecting it into the market without any increase in production. That is the primary reason why prices are going up across the board. Now keep in mind, she tweeted this out herself yesterday, and she specifically cites Chevron and ExxonMobil. Chevron and ExxonMobil are publicly traded companies, which means they have open financials. We can see how much profits they actually made. So let's take a look. This is the income statement and balance sheet for ExxonMobil. This is on the official NASDAQ website, the exchange where it is traded. So first, let's look at the annual statements. Now keep in mind that these numbers are all listed in thousands, which means the actual number is take a comma and add 3 zeros to it. So 54 million is really 54 billion. Now there's a lot of numbers to pay attention here, but let's just specifically, just for the sake of the discussion, focus on revenue and gross profit, because she was specifically talking about profits, which is that gross profit? Is that net profit? Let's just do gross for now. From 2017 to 18 to 19 to 20, you actually see a massive decrease in their gross profit from 2019 to 20. So that's hugely down. Now this obviously ends on 12/31/2020, but just to give you some context. You even see things like right here, their operating income going to negative $30 billion, which completely almost wipes out their previous 2 years of income. Now just for context, is net income the same as net profit? Typically, net income is synonymous with profit since it represents the final measure of profitability for a company, just so we're on the same page. So for the net income for the entire year, specifically on Exxon, here it is 17, 18, here's 19, but then here's 2020, $22 billion net income loss. Now we'll change it to quarterly so we can see the analysis and breakdown from 2021 specifically. So for the quarters of 2021, this is when Donnie was in office. You have a $20 billion net income loss. It didn't start getting positive until the first quarter of 2021, where they showed a $2.7 billion profit. Now, the gas price increases didn't really start coming along until Joe was in office. So even in the first quarter, you really didn't see much of that. So here's when the first quarter of this really even began. But even for the sake of argument, even if you just look at gross profit, which isn't even the real number, 16.8 to 23 is not double. Now, what's important to remember is that this company has increased its revenue almost annually for probably the last 10, 15 years. And even with the demonization of fossil fuels and whatnot, they're still growing their revenue. They're still making investments. You can see that their revenue is growing quarter over quarter. More people are buying their products. They're making investments and they're growing their business. But if you even just look at the net income line, they had a $20 billion loss. And then if you look at the total, they went from 2.7 to 4.6 to 6.7. Yes, in theory, you could say, okay, they doubled their profits from this period to this period, but how are they supposed to make up for the loss? They would be defunct and they would go out of business if they didn't adjust accordingly so that they could make their revenues back. If you go and look at a chart for the stock price over the last 5 years, it's down from December of 2016 till now. It's gone down from $90 a share to $60 a share. This is a company that is losing value over time. So it's like, okay. On top of that, look at their income tax. Their income tax is increasing significantly. I thought they didn't pay any income tax. They're also, with all of this additional sales and all of their additional revenue, look at their sales and general administrative costs. They're barely increasing their costs. So they're keeping their books tight. They're keeping their numbers on point and not showing these gross increases in their general costs. That's a smart business strategy. Now, I won't go too much deeper than this, but you can see this is their balance sheet over the course of the entire year. They've got things like their inventory increasing over that course of time. You got things like their fixed assets remaining somewhat the same, or they're actually even selling off or losing value on some of their assets. Their total assets, all of the things that they own are staying about the same. Meanwhile, things like their accounts payable, how much money they owe is increasing. There's a lot of different things at work here.
Now, because of Joey Choco Chip Full Brimming Depends, companies like ExxonMobil and companies that make investments in things like pipelines and the ability to produce and provide energy for people, they're on the chopping block. They're demonized in the public square, they're demonized in the media, and not all that many people are a fan of them. When making a business decision, any business has to consider what their financial risk is going forward in the event that the bureaucracy decides to crack down on some aspect of their business that may increase their costs. So aside from them losing a ton of money last year objectively, which you can see on the balance sheet, they don't know at any moment what could be happening, what rule by decree could affect their business. Like that in the case of the company that invested in the Keystone XL pipeline. One day they have a permit to build, invest, and invest all this money so that they can make profits later. And just like that, through an executive order, it's gone. So all of that money and all that investment and all that shareholder value and potential future earnings wiped away by decree. On top of that, the federal government and a variety of other institutions, not only in the United States, but around the world, are pushing towards this theoretically clean future, which means that their future profits are going to probably have less value. They have to make up all of those losses from previous quarters, and they have to strategize how to make their business resilient going forward.
Now, the other company she mentioned was Chevron. Here's their official financials on the NASDAQ website as well. Let's take a closer look at this. This is the last 4 years of Chevron. You have things like this is their gross profit, 39, 43, 38. This is all under Donnie. This is all with low gas prices. And then you see here this precipitous drop in 2020 because of you know why. So first we'll look at the gross profit. They were doing 39 billion in 17, then 43, then 38, keeping it relatively simple, but not blowing it out of the water by any stretch before this huge decrease. And then here you have the net income.
While gas prices were low, they made a really healthy income, which dropped massively in 2019, still with all of the low gas prices. And then right here, their entire year was completely wiped out with a $5.5 billion loss in 2020. Now we've switched back to the quarterly so we can see the stats from this calendar year. If you look here, in Q4 of 2020, a $665 million loss. Then right here, you finally have the first bit. This is back when gas prices were still low. They really didn't go up that much before the end of Q1, which here they're showing only a $1.3 billion net profit. Now, because a lot less people were driving in 2020, and obviously more people are driving and consuming gas now, you can see their total revenue is going up quarter over quarter throughout 2021. You can see their gross profits here. This right here to that, again, that's not double. This is the only time that this was actually in effect, these higher prices, most of which coming towards the end of this year anyways, but no matter how you slice it, that's still not double. Now, yes, you could say their net income has gone up considerably, but again, they have to account for all of the loss. This was just one quarter, a $665 million loss. They have to make up for the losses of the previous year. So here you can see their net profits going up from quarter to quarter. This is double yes. Here's the stock price for the Chevron Corporation over the last 5 years. You can see 5 years ago it was at $117 a share, and today it's trading at $111.91. If a company was just doubling down, exploding profits, you would see an increase in this stock price. And yes, they do pay a dividend, but just to show, it's like these companies are in theory and objectively losing value, at least in terms of their stock price and market cap.
By forcing the United States to no longer be a top or number one producer, you're forcing the citizens and all of the companies in the U.S. to purchase that oil and gas from overseas. As a result, you have the risks of transport costs, you have these pipelines, you have all these other risks that are inherently baked into the cake. You have the value of the future earnings now that the government, the bureaucracy, is investing more money into electric vehicles and offering tax credits that's tilting the market in that direction. All of these things have to be factored in with any of these businesses, on top of the fact that everybody kind of hates on them. So they lost a ton of money in previous years. You don't know what Joey's going to do over the course of the next 3 years. You have obvious losses. They're forcing it to be generated from overseas. Other companies are in control of the price in a lot of ways, and these companies are reacting to it. On top of all that, it's a lot more difficult to get workers. You have this marketplace where it's so hard to get employees. There's a lot of risks at play here, and businesses have to figure out how to make sure that they're profitable not only now but into the future. They have to adjust to the market. So completely financially illiterate Decepticons like Joy Reid and Elizabeth Warren that have absolutely no idea what they're talking about and lie to you knowing that you're not going to take any more time to research into it the vast majority of the time, to blame this squarely on these two corporations or any big oil company is an easy target that most people fall right into without doing any research. And here's a news flash. They do this about every topic, every day, all the time. They're not stupid. They just think that you're stupid.